patience at all, innit? Hey, what's up? How are you guys doing? I hope you're excited like I am. I hope you're excited like I am. I am very, very happy. Okay? I am very, very happy because we've got the dollar to move and it's making the chart clear. Yeah, all we need is the dollar to move and the chart is clear for us to see where price is going. So I'm excited. You can see I've got the Aussie New Zealand on my chart. I wanted to show you something that I've been talking about recently. um, to catch the continuation of. So right here, we had this down candle prior to the move up during New York, and then we broke down. And as soon as we broke down, look how little time spent there. Okay, we broke down, and then quickly this open hit this, and then be off the races. That's the trend continuation for you to catch. So like on all these pairs that are extreme, okay, like for example on this one, on Aussie yen, okay, so currently we had this move to the upside and then we broke down. So I'm looking at that last down candle to provide support, and then we continue on dropping. Okay, something like that. So I want you to pay attention to this pattern anytime we are in a like a trend and you can't get an entry, you can use this technique to get an entry. Okay, you can use that technique to get an entry. Let's jump back on give me a second, guys. Okay, sorry. I had to deal with the king. And he's now okay, so we can carry on. Start with the dollar. And boom. Bullseye. So you can see we've hit the 94.59 or the 94.60 level that we were looking for. All right, and we've seen a rejection. So what is going to happen next? Like I said, that there's a last up candle in there. Right, that's the last up candle there. So I was not expecting price to push through it like it has done on these previous levels. So we might see ourselves with a bit of a rejection and a pullback. Now with the pullback, I'm looking at, let's go back to the 1 hour time frame. All right, I'm looking at these down candles at the 94.10. Okay, that's the level I'm currently looking at. I don't want to see price breach the 94.10 level. Okay, why? Because we are coming from a 4 hour level. So if we breach the 94.10 level, it means that price might go down more, and I don't want to see that. So if we breach the 94.10, okay, those down candles, if we breach them, then I think we might be going down for a bit of a pullback. So therefore we will have to be patient. So these down candles, we don't want to see price breach them. Okay, they've run stops here and they've run stops here. Okay, it can breach this and come and hit this down candle on the 4 hour. This one here, there's a lower gap. Okay, there's a low gap in here. There's no gap up in here, but there is a low one. So they can run this, hit this, and then reject and go higher. That will be fine. Okay, that's allowed, that's permissible, and that's okay. But beyond that, we don't want to see anything below that, because this can be a wick. Can drop down. They can drop down in here, and then this can be a wick, and then stop these 4 hour level traders out and then send it higher again. Okay, and that's all I'm looking for on dollar going forward. But we have hit the target very nicely. That's the, if I go back and I do this one all over again, that is the main threshold. That's the middle of our main target. So in here, we're gonna get a bit of a either sideways market or a pullback. At the 50%, there's always either a pullback or price will go sideways before going for the next upside objectives, which is the 95 and then 95.50. So we have to be cautious going forward, because we've got our target. So let's say this is, if this was a football game, we call this one halftime. Okay, so we are going on a halftime, and then we're gonna continue. So the line in the sand is, we don't want price to come below here. We want it to run. It can run this equal low. Right, they can run this equal lows, okay, and then hit this down candle and reject and continue going higher, and that's it. Let's get rid of this, because that doesn't serve us anymore. That has been done. Okay, so we can get a run below this low, hit this, and then continue going higher. That's all we want. With that, euro has also filled in that daily gap. Let's remove this one. Is done, that one is done. Yeah, we filled in this gap, right? So for now, price is balanced to here. So the next downside would be the 50% of the range, and then we'll be looking for this old high, the March high. We'll be looking for that. We could go back in the form of a retracement. Let's remove all this. So let's find our breaker. So we do have this down candle taking out that high. That's our first one here. I think actually have 3 of them. There's one here. Okay, that down candle went up and took out this high. Okay, and then we have another one there, and then we have another one here. So we have 3 of them. So I'm going to drop down to the lower time frame and see which one has a beautiful last up candle with a sharp move to the downside, so that we can take advantage of that as well. Okay, so let's drop down to the 4-hour. Okay, so on the 4-hour day, this one has got a beautiful last up candle prior to the move down. This one also has got a massive one, this last up candle before this move down. At the same time, we did run some stops. We have hit this down candle and then went down. So I think everything is balanced in here. The only thing that is left is this low gap in here and the last up candle. So we could see a potential pullback if the dollar retraces. We could see a potential pullback into this last up candle, and then we'll be looking for a continuation to the downside. So back to the daily. Let's see which one will line up with the middle of okay, so that will line up with 50% of retracement, above 50%. We want to be doing business above 50%, so the last one will be the best one to go with. At the same time, let me measure the last swing high. Okay, so our last swing high brings this to 127, 168 is here. Let's see this one. Okay, so it seems to be working off from this down candle, which makes sense. Yeah, which makes sense because this one was a stop run, that one didn't. Yeah, so it makes sense on that. So 127, a bounce back to okay. Let's drop back down to the 4-hour. Back to the 4-hour. There's nothing in here. On the 1-hour, if we break this high, then we'll be going for a retracement. As you can see, if we break this high, we will be going for a bit of a retracement. So be mindful if you're short on this one. If we break this high, we might be going for a bit of a retracement, and with the dollar hitting that level, that could also support this idea. Okay, so for now, downside objectives have been met, so be cautious going short going forward. If we break above this high, depending on how we move away, that could offer us a tradable level counter trend, but tradable. So if they move with speed and break this high, we can wait for retracement and then buy to continue going up with it. British pound, I had this level to go short, but looking at what the dollar is doing, maybe we might be pulling, we might be going in for a bit of a retracement. So let's delete that for now. And that was a buy. Yeah, that looks like a buy. Yeah, that looks like a buy. We do have equal highs in here, and we do have euro pound dropping. So this looks like a buy from there. We do have this low gap that is a problem. Yeah, that low gap there, that would be a problem. If we break above that gap with that last up candle, then we will come for this equal high. Okay, I don't want to give you to buy it because we could hit this and then drop. We are still bearish anyway, so we could hit this and then drop. All right, so to be careful, just stay away from this for now. We've already got some nice trades on euro pound and the other pairs. Let's go on to New Zealand. Again, that also has reached its target. We are looking for continuation to take out this low, but looking at what the dollar is doing, we might get a bit of a pullback. I don't want to see that happen. I just want this to continue dropping. Okay, if it pulls back, it becomes a bit hard to find an entry. Yeah, it becomes a bit hard to find an entry. So I just want it to continue going down to take out this and then be done with it. Because once we take out this low, the funds, the institutions stops will be run. Okay, here, that's institutional stops. Their stops are resting there. So once we break it, their stops will be run, and we might get ourselves a bounce back, and then with that we can start looking for either a retracement, and then we find this down candle as the breaker and then sell short again. Okay, so again, we are extreme. Today is Thursday. We could be looking at the low of the week forming, possible low of the week forming. All right, so if you've enjoyed this short, just keep some on and then wait to see on the lower time frame what I've just shared with you guys. Okay, a run above a high. So like this one here, they've run above this high. So if it does come down and break this low, depending on the energy they break with it. So I showed you example on Aussie New Zealand. Look at the energy they broke with it. Okay, if they do the same thing on here, then you can sell the last down candle here. All right, so I'm gonna leave this out for now. If you do see what I'm describing, then by all means go for it for this low. Okay, because it's just almost there. I think it's gonna run down with speed to take out that stops. Okay, they will run down there with speed to take out that stop. So if we do break down, this thing will run quickly because they want to get this done as quick as they can, just like up here. Okay, the stops above this, see that they will run it with speed right in there quick and get it done, and then broke down. So they could do the same thing in here and run down quickly, get it done, and then move on. Right, so if you do see it, by all means have a play with it. Aussie, I think Aussie dollar is gonna continue going down. Let's go into the weekly. That has also reached a high time frame level. So you're gonna stay away from this for now. Okay, we've come back to rebalance this. Next target will be a run below this low, but this is a good level for a bounce. So I'll say stay away. If you want to sell short, stay away. Wait for a wait for some bullishness. I'm gonna teach at the end of this session institutional sponsorship. Okay, it's similar to what you saw on the Aussie New Zealand institutional sponsorship. How to find elephant in the room, or to know that the elephant has entered the room, and that's what we call institutional sponsorship. You will need that to understand when to enter the market. Okay, after they've stepped in, when to enter. So stay tuned. I'll give a lesson on institutional sponsorship at the end, and then I'll come back to this one. Okay. Dollar yen, in the morning we missed this, and I said wait for it to break above and then retracement, and then we could get an entry, and that's what I think is going on in here. Okay, price broke it, it went above, and then came back down for retracement, and then it's off to the races again. So I think the next upside objective will be the it will be the 105.82 with a little bit of profit taking up in here, right there. Okay, 105.63, taking something off there, and then leaving the rest for 105.82. Okay, dollar Swiss. Let's go back to the 15 minutes or 4 hour, because I saw something and I didn't make a comment on. Okay, so my screen is frozen. All right, there you go. Yeah, they are leaving a beautiful level up in here, right? They are leaving a beautiful level there. So patience is required. You can chase it. I think in the morning I said you can chase it and then place your stop or wait for retracement, something like that. Yeah, you can chase it if you want, because it looks like it doesn't want to pull back. So we can go higher, or they've left this little gap with this down candle, so a retracement back there will send price up higher again, right? So you can chase it if you want, but and if you did catch it in the morning, like I did mention, then obviously let it run. Okay, next up, you can see I'm breaking. It's because I do have trades on and I am managing them at the same time, so forgive me. I have to do it, because if I don't, once I finish, they might have gone beyond where I want them to go and I'll miss my exit. Okay, so as I'm going through them, there are certain pairs that I have position on. So I have a position on gold for a short. and I have a position on this one for a short. So as I'm doing this, I'm also managing them. So on this, I think we're gonna get a continuation to the upside. We might get retracement here for continuation. If it pulls back, then you can join again. But if you're long, just let it ride and your stop loss be below here. Dollar CAD, I've been watching this person this morning, and I've been waiting for it to break and close above this high for me to get an entry, and it looks like it's now about to do it. So I want to see a close. We've got 3 hours. That's so long. I'll be watching the hourly to see if we close above that level on the hourly basis. Then I'll just go long and place my stop below there, and then and see if I can get continuation to. I think this level is just right there. They're going to tap it, and if they're going to do it, I want to see them run up quickly with speed. Yeah, and no delay. Just run it up there quickly. So if we close above this level, then I'll consider that. Euro pound price is giving us a beautiful sell from yesterday. If you didn't catch this, then you didn't pay attention. Yesterday we did have that level and price fell short to come there. If you drop down to the 15 minutes, you'll see that price fell short to get to that target, and then this morning it went straight to that level, and then we saw a push back down, right? So what is going to happen next is you're going to look for downside objectives. This is one of the trades that I have on that I was watching. So this has been met. That low has been taken. So that was a decent one. Our next downside objective will be this equal low. Okay. So that's the next target. We want to see price drive down there for a continuation to the downside. Okay. So watch that level 90.80. Institutional level 90.80. Yeah, so 90.80 will bring us back down here. Watch that for our next downside objective. Aussie, New Zealand, beautiful trade. I got a re-entry again on this one. I've been waiting for it since yesterday, and yesterday price went all the way up here and never broke down, and then today I watched it, and then provided me with this beautiful breaker, and as soon as it broke it, I placed my sell limit. Yeah, it was so quick. If you don't pay attention, you might not catch it. So as soon as it broke down, place my sell limit there, and then hit it, and then we drop down. So I'm still looking for downside. Let's see. I'm still looking for, so we've been here, we've been there, so I'm looking for that as well as downside objective. Okay, so on Aussie New Zealand, I'm looking for 1.07458. 1.07458. If it does pull back, okay, let's say this candle closes and it does pull back, the entry I got was a lower time frame entry, which is the 15 minutes. Yeah, it was a 15-minute entry, but on the hourly, yeah, price is fractal. On the hourly, we still have this down candle and the last up candle sitting there. So if we turn around, we've got 13 minutes. If we turn around and we push back up there, you can sell short and place your stop above here for a re-entry. Yeah, you can do that and continue targeting. It's just a re-entry, it's not a new trade. You're gonna just have this mini trade for continuation to the downside. Okay, so that level there. Just going to the 15 minutes. Yeah, this down candle there. So if we come back and hit it, so this is, it's got two names. So this is a retouch and then retrade, or retrade and then retouch, one of them. I'll check and confirm. So we've got a retouch and then a retrade. Euro New Zealand, we are sideways, so like I did mention, stay away for now. Same thing on this one. We broke this down candle and I was thinking, okay, now they've broken this, we might stay below it. They did come to that gap we spoke about in the morning, and they broke above it. I wanted to see if they will hold there. On the higher time frame, it would have created this and then another down candle, and then we could have done something with it, but they've just broken above it. So it looks like they want to continue going higher on this one, because the Aussie is very, very weak. Okay, so it's gonna push higher. For those of you that were not here in the morning, I did give, you see in the group chat, I've left an image. That image is something that I'm trying to discover, how they run around with the Euro New Zealand, Euro Aussie, Pound Aussie, and Pound New Zealand, and I'm trying to figure out when they buy, okay, and when they sell which one, because there is a mechanism going on there, and I'm trying to figure that one out. So I gave out that studies for anyone who's interested to study it and then bring back results. Don't study and keep it for yourself. I want you to bring back results for everyone to enjoy. So if you do find something, okay, bring it back and let's all enjoy. I don't have the time that I used to have to do like more studies that like I used to do. Okay, I've got lots of commitments now, so I've given you the all the tools, necessary tools you need to do the studies. Okay, all you want to see is how they use the Aussie, New Zealand, the Euro Pound to manipulate the Euro New Zealand, Euro Aussie, Pound Aussie, and Pound New Zealand, because there is a manipulation going on where at some point, let's go on to Euro Pound. Okay, at some point, like for example today, we saw Euro Pound dropping like crazy. So with this drop, what usually will happen is we find what this pair is doing. So if this pair is dropping, okay, if this pair is dropping, it means that New Zealand is strong and Aussie is weak. Okay, so if New Zealand is strong and Aussie is weak, and this pair is dropping, it means that Pound is strong and Euro is weak. So the strongest pair against the weakest pair will be Pound strong, Aussie weak. So if you go into Pound Aussie, this thing should rally crazily. Yeah, and you see the fruits of that. But that's not it, because there will be times that this will be dropping, yeah, but then this one will be doing their crazy rally. So there is a mechanism going on which I'm trying to figure out. So that's why I left that image there. So if you want to study it, you can hit me up, and then I'll give you more insight so you can spend time to study it. All right. Okay. So these two for now, just stay out. Aussie yen, that level we should see its support price. Yeah, we should see that support price and send it, continue to send it down. You can practice with it. Okay, it's short here with a stop above that and a continuation to the downside. On a demo account, practice. Yeah, practice to trust the process, and then look for downside objectives. We do have, yeah, all the way down here. That's the downside objective. So you can practice it. Okay, don't look for anything, just sell short, stop above here, or you can put it above there, okay, to cover the last up candle as well, because it could break this and go to the last up candle. And then look for downside objectives. If it stops you out, then we have broken to the upside. Depending on the move that breaks it, then we can go in and start looking for reasons to go long. New Zealand yen, nothing going on at the moment. It's just sideways, so be on the sideline. They've just run the institutions out, so that's why price is hanging around. Euro yen, like I said, I am short, and I was looking for a continuation to the downside. It looks like price is gonna go sideways, so I might end up closing the trade if it's not gonna do anything. So my short is from, I think, on the hourly. Yeah, this last down candle here, that's where my short is, and it just keep hitting it and coming back down and up and down and up and down. Pound yen, I said stay away because it's not doing much. Looking at it right now, I will just demo trade. Practice, demo practice. Yeah, demo practice it. We have this last up candle, move down, we come above it. So practice the breaking structure to rebalance here. Okay, that's all. Practice the breaking structure for rebalancing to this last up candle there. CAD yen, we are stuck in a consolidation. All the yen pairs are stuck in a bit of a consolidation, so let's leave them out for now. EuroCAD, same thing. Based on the 4-hour, we are not doing much. Yeah, we are not doing much, so that's another pair to stay away from. That is pound Aussie. Right, let's see if this down candle will hold. If it doesn't hold and we break it, we can use that to sell short for a bit of a pullback, because that's the last. In the morning I did say they could slam it up to this last up candle. I think it was on the 4-hour, sorry, the last down candle here. They could slam it there, and they've done that beautifully. So we could get a bit of a pullback. So if we do break this down candle going in tomorrow, and not maybe today, but going in tomorrow, if we break it, then we can look for reasons to go for a pullback. If you are interested, it's not required that you go against the momentum, because the momentum is so strong to the upside. So if we break it and you're interested, then you can by all means do so down here for a continuation to the downside. We're gonna do the institutional sponsorship, so if you understand it and you do see it and you want to take it, then that's entirely up to you. And pound New Zealand is doing the same thing. They've gone above this down candle and fell short to hit this. So I think on this one they've got a bit of room to the upside. Yeah, there's a bit of room to the upside right there. So let's go on to the hourly. There's nothing on here. Zoom in. This level looks nice. There's a gap and this down candle sitting right there. If they do come there, I think a long from that level is not bad, with a protection below this up candle. Okay, a protection below this last up candle here to go back to this up candle, and then the high time frame level, which is that one there. Okay, so if they do come down to here, you're buying this with a stop below there and then targets in there and there. Yeah, that could work out. New Zealand CAD. Yeah, I think we did go through this in the morning. If we do pull back, let's look at it again. They have tapped into this low, and today being Thursday, New York, we could be forming the low of the week. So the wick of the weekly range is gonna produce. Yeah, it's gonna produce the wick of the weekly range. So let's go back to the 4 hour. What I don't want to see is them closing above this down candle. If they're close, we could get a pullback into this area, this low gap in here. It's a small one, but if they close above this down candle, we could see price go there. This is one of the price signatures, fair value gap for continuation of a trend. When price is bearish, we hit them, we look for a continuation to the downside, and vice versa. If we are bullish and we see a gap, we hit them, we want to see a continuation. So looking at what price is doing right now, it should just continue to go down after hitting this. Yeah, it should continue going down. If it doesn't and we close above it, then we'll be looking for upside objective. I don't want to see that happen, but I don't control price, so if that happens, then we should be looking for buys to come back up in here. All right, so that's why we see this current rejection. You will not see it on the lower time frame, but it's on the higher time frame, and we should see a continuation to the downside. So I think this is still valid if you want to, and if it stops you at that, means price will break above that, and then we can look for buys to come back in here. Okay, Aussie CAD. Aussie CAD is not doing anything. It's right dead. We've broken below, and for now, target has been met. This is a target. Once target has been met, you want to be cautious going forward. Okay, this is institutional stops. This is not your stop. This is institutional stops. So once they hit them, there's a lot of things that can go on. It's either we go sideways, yeah, we have sideways market, or we're gonna get a retracement. It's gonna pull back inside because of the vast number of orders sitting here. Once they hit, it's like counterparty. There's lots of sellers and there's a lot of buyers, so it will cause price to retrace. So where we are now, if you're short, make sure you've taken most of your profit off, and then you just wait to see what happens, because it's either we're gonna go sideways. Remember the 4 types of market phases. So we have consolidation, expansion, retracement, and reversals. Okay, so we had expansion, retracement, expansion, consolidation, reversal, and we have come below a low, so we could get one of these, consolidation or retracement. Okay, so once we've got this done, make sure you've taken most of your profit off, and then you sit and wait. All right, and that will bring us to the end. Let's check what Bitcoin is doing. So Bitcoin, I did say this down candle should support price and send us down. If that doesn't happen and we break above, then we'll be looking for a buy up to this level. We did get rejection initially, and then price has rejected back up again. So on the hourly, we are still bearish, not bullish, because this is our last swing. This is our last swing to the downside. Okay, so if we break above, then we'll be going higher. This is just consolidation inside a previous swing high, a previous swing. So we could get price to swing up to this last up candle, which is still within that down candle on the 4-hour, and then it will swing back down. Okay, so be careful if you trade this thing. Gold. Okay, so gold has been doing playing with my psychology today. So I went short, and then it goes up, and I went short in here, and then went up, and then came back down, and then I went short again on the lower time frame right here. Yeah, I'm playing with the breakers, and then it went down, and then it rejected. My stop is above here. I'm looking for a continuation to the downside, but it looks like it doesn't want to do that, so I might end up closing this trade and then see what price will do next, because I'm looking for a continuation to the downside on this back down here. Okay, this is a previous institutional level, which is institutional stops here, so they could be tapping into that and then bringing it back up for retracement, right? So anything can happen below here, but I would rather see them continue going down. That's why we have that tug of war going on there. And then oil, we are trading at the weekly last down candle. So if we see a run on stops like this, okay, and then we break. And yeah, I don't think we did. Yeah, I did mention in the morning that for us to break, it needs to break above in here, so it's a bit all the way up there for you to consider a trade on this, because it's a bit sideways and you don't want to be playing around with this. Okay, so for now it's either you wait for us to break above there or you sit on your hands. A lot of sitting on the hands to be done, but it's worth it because you don't want to be caught on the wrong side. Let's check this one and see what it's up to. Okay, so we've come back to that level as a retracement. What I don't want to see is to us to go all the way up. It will be not good at all. Yeah, it's coming back inside here. That should send price back down. Because they've already done the job on the upside and then rejected. So that should send price back down and take us at least below this low. So I'm gonna watch that for now. If you do have any pair you want me to have a look at, send it and then I'll have a look at it for you. Okay, no pair recommendation. Cool. Then we're gonna carry on with the lesson for today, which is institutional sponsorship. So when we talk about institutional sponsorship, I want you to think about an elephant. Okay, I want you to think about an elephant. Why an elephant? Because an elephant is a huge mammal, an animal, and when it gets into a room, it cannot hide itself. Yeah, it cannot hide itself because it's so big. Yeah, it's so big that it cannot hide itself. So when we talk about institutional sponsorship, it's basically identifying when the smart money has entered the market. Yeah, identify when smart money has entered the market. And how do we know that? We know that by looking at the candles, because there's no way you can tell that they are in the market. The only way you can tell is by looking at the candles. Okay, so for example, let's go on to any pair. Let me think of a pair that has got let's use pound Aussie. Okay, and let's go on to the daily. Now remember, I did give you some reference points. I gave you a reference point which is an old high, a last up candle, the last down candle, and then an old low. Okay, those are your 4 reference points. So when we want to see if institutions have entered the market, these are the 4 areas I will know they are, or identify them being in the market. So let's say price is at a last up candle. Okay, this is the last up candle. And then price is coming up. Okay, as price is coming up, they will be leaving what? Down candles as a buy for reaccumulation. They buy, down candles, and then move away, down candle, and then move away, down candle, and then move away. Okay, till we get to this last up candle. Once price gets to this last up candle, what you want to see is smart money going to come in and send price back down. Okay, because if you don't see their footprint in there, it's not showing you that they are in the market. Okay, it's indicating that they are not coming in, and for them to come in, it has to show you proof. And the way to see the proof is there is going to be a sharp move away from that level. Okay, there is going to be a sharp move away, and then that sharp move away usually breaks a down candle. As price is going up, it will usually break a down candle. So as it's coming up to this last up candle, as soon as you see a sharp move come in and break a down candle, that's indicating that there is an elephant in the room. There has been the presence of an elephant. That's how you know that smart money has come in the market, and that's what we call institutional sponsorship. Yeah, the institutional sponsorship, they have come in. So then going forward, you can start looking for price to retrace and then continue going down. All right, that's how we identify institutions in the market. Because if they are coming in the market, they have to show their footprints. They cannot hide it. Because of the vast majority of their orders, they can't hide it. Yeah, that's the nature of their business. Their orders are too big, and once they hit the market, it causes, it's like, let me see if I can find elephant in the pool, elephant in the room. Okay, see, let's say this one. That one. Right, when there's an elephant in the room, it's just so obvious. It cannot hide itself. Yeah, it's just so obvious. Like, how can it hide itself? It can't. It's so obvious, right? And that's how you're gonna see institutional sponsorship on the chart. Once they come in the chart, their presence should be so obvious. And the way you see it is the magnitude, how price moves away from the level. So the levels are what I've mentioned: the last up candle, the last down candle, above a swing high and below a swing low. So when they do hit these levels, you want to see the move away. Yeah, you want to see the move away. So in here, okay, below this low, below a swing low, as they tapped it, the move away is indicating that smart money, or there has been an elephant in the room. Okay, so then we trace it all the way back to the last down candle, prior to the move up, that's where we start. That's their footprint. Okay, that's their footprint. So we wait for price to come back there and then push higher. That is one way. The other way is if they run a stop like here. Yeah, they run a stop and then they reject. Okay, once they reject, they move away from the rejection. If it's not let's say something like this. Okay, after running the stop, they go up, come back down, go up, come back down, go up before breaking this high. That is not smart money. Yeah, that's not smart money, because if it was smart money, as soon as this low is taken and they reject, it has to do what you see here, quickly reject and go higher, because they don't want to spend time down here. Right, they don't want to spend time down here. They just want to get their business done and move on. So the quicker they move away, that is indicating that smart money has been in the market. So we identify for this kind of trade, we identify this, the last up candle, okay, is the reverse of the down candle breaking. So it's the reverse of what the 1 hour is doing on the Aussie New Zealand. So we identify that and then we look for retracement and then we can buy it. Okay, so this is what we call institutional sponsorship. We want to see a quick move away from a level. So the levels are the last up candle, the last down candle, below a swing low, and above a swing high. So if we go on to pound yen and we go on to the weekly, let's remove all this drawing. Okay, and then look at this last up candle. Okay, when price did hit this, the move away here is indicating that smart money came in, because as soon as it hits it, rejection, and then the next candle fired down. Okay, so this move down is indicating that smart money was there. So we identify our last down candle. In this case, we had 2 of them. So this last 2 up candles, and then we draw a line and then we wait for them to come back, because they will come back. And then once we get back there, we look for what reasons to go short again. Okay, so that's how we use the institutional sponsorship for you to know that smart money was in the market. So if you're looking for smart money footprints, you will find their footprints above a swing high, below a swing low, at a last up candle, or at a last down candle. So for example, as price is coming back down here, yeah, this is a last down candle prior to this move up. Right, this is the last down candle prior to this move up. So as price is retracing, let's say I'm looking for a buy. Okay, let's cut this thing off. Let's cut this one off. Right, so I identify this, there was a quick move away. So I say, okay, I tell myself smart money was in the market. So if they come back down here, they're going to do what? They're going to buy again. So as price is coming back down, I'm not going to blindly just say, okay, because they were in the market, I'm going to buy. No, what I'm going to do is I'm going to wait for price to hit the level and then see if they will be in the market, because as it's hitting it, it doesn't guarantee that they are going to come back in. Yeah, they are not obliged to do that. So you wait for price to hint to you that they have definitely come in. So as price is dropping, yeah, this hit, I want to see a quick move away to break an up candle, because if I do see that, that's tipping their hands to me that they've come back. Yeah, that's tipping their hands to me that they've come back. So if I do want to buy, then after the break above this high, I can go in and start buying. If I don't see that, it doesn't show me that smart money is in the market, because I want to see institutional sponsorship in my trade. So the way you see it is the quick move away, breaking, and then retracement. That is your institutional sponsorship. So this move away is the institutional sponsorship. The harder, the better. Okay, so if I just get rid of these lines and I play this, okay, I'm still waiting. Are they in the market? No, because they've not broken, okay, above that swing high there. Okay, because I want to see them break it. That's them, because they sold here. Yeah, they sell with up candles, so they sold there. That's what caused price to drop quickly. So for them to commit to buying, they have to break where they sold. If they don't break, it means that they are not willing to buy again. So price then plays around, and then as you're watching it, you're gonna see if they step in. Okay, so as I'm playing it, if they step in, you're gonna see it. Okay, taking long. Yeah, so now where I am, do you see smart money in the market? If you don't see it, then that's fine. Over time, you will. But right here, look at this high. Right here, that's a commitment, because if they are willing to continue going down, they won't break this. Okay, if they are willing to go down, they are not going to break this up candle. So the fact that we had this huge move up to break that is telling me that smart money has entered the market. Therefore, a retracement down, I have to find the last down candle prior to the move up. Yeah, this one here, and then another quick move away. So that's your institutional sponsorship there. So once I see this and a break, then we know that they are in. So if you go back onto this one, when did we see smart money come in the market? Here. Yeah, right there. Break above it, smart money is in the market. Okay, let's go back to pound Aussie. So this move down, we want to see smart money in the market right here. Boom, smart money is in the market. So we identify the down candle prior to that, and then we want to go in that direction. Yeah, so that's institutional sponsorship for you. If you practice this, you're gonna see most of the time, okay, if you're right, if your trades are right, there is institutional sponsorship. If your trades are wrong, there was no institutional sponsorship. Yeah, you can go back and check some of your trades and see you could have been buying and selling down here, which is fine. Okay, but when institutions stepped in is when price broke above this high. Okay, so going forward, if you want to see in the lower time frame, it doesn't matter, it's the same thing in the lower time frame. So as I was showing you on Aussie New Zealand, okay, the reason why I said this was institutional elephant in the room was the move away to break this down candle. Okay, price went up, and then if they are willing to continue to go up, This down candle shouldn't have given up. The fact that this down candle gave up with this kind of move, okay, this quick move to the downside, was indicating that smart money was here. So if price gets back to this, I should see a continuation. Okay, so if it's indeed smart money, we should see a continuation to the downside. All right, and that's how we identify institutional sponsorship. If you do have any question, post it in the chat room and then I'll answer you. If not, then I think my day is done and I'm going to take a rest. Does anyone have any question? Do you think DXY will sell off next week, given that it has hit the target for this week? Let's go back to DXY. No, we don't assume. Okay, we go with the trend. Okay, we go with the trend. The fact that it is hit the target doesn't mean it's gonna sell off. That's why we have we use protocols. We use like protocols. So once the target has been hit, we look down and see where price shouldn't go to, and where when it breach, then we are definitely going the opposite way. Okay, so we still want to trade in that direction because we don't know that they're going to go down. No one knows apart from smart money taking his trade. We don't know. So as price is hitting that level, yes, there is a chance that it can go in a retracement, but because we are bullish, okay, I want you to watch here. As price was dropping, okay, yes, it did hit levels, but it just continued to go through. So if you start thinking that, okay, because you've hit this level, price is gonna retrace, you will start looking for let's say you start looking for longs on dollar. Okay, you start automatically, your mind will start looking for longs because you think that we've hit a level, so price should do that. Okay, and that has been a problem. Even myself sometimes, the fact that I have that level there, once price hits it, I'm expecting that. So once I do see, let's say on euro, okay, let's say price breaks above this high, okay, because we've hit that level, what I automatically do is I'll switch my bias to buying, and then all of a sudden price will go up a little bit and then reject and then continue going lower, and then I get confused. Okay, I get confused. Why is price doing that? So one of my I have a mentor as well, and he told me not to look for I shouldn't do that. Once price hits the level, that means I've hit a target. So I have to be patient and see what price is going to do next. So as we've hit that, all you have to do is just be patient and then see what price is going to do next. The protocol is it doesn't have to break certain levels. Okay, so on the hourly right now, you can see we've been respecting. This was a run on stops, so that's fine. This was also a run on stops and engineering, so that's fine. But you can clearly see that we've been respecting down candles, and that's the protocol. So as we are bullish, price should naturally respect these down candles. So we did respect this one, we did respect that one, and we are currently respecting this. Okay, that's institutional order flow. Once we are bullish, down candles should be respected. Okay, so currently they are being respected, so we are bullish. If this one gives up, if that down candle gives up, this is just 1 hour time frame. It doesn't mean that we are bearish because the daily is still bullish. That doesn't mean that we are bearish, or it means that 1 hour is giving up. So there is a potential that price is going back down to find another area to find liquidity to continue going higher. So my job is to find where, okay, my job is to find where that liquidity is. Okay, so in here, I have to find where price is potentially or could potentially go for liquidity. And like I did mention, there is liquidity below here because you have equal low and these down candles. So if we do break down, there's a possibility that we could see dollar come down here, and it doesn't mean we are going down. It's just coming down for liquidity, and then we're gonna see a continuation to the upside. So on the daily, I don't know how they're going to program it. I don't know how they're going to do it, but we could come down here and then reject and go higher. Okay, so yes, we've hit the high time frame target, but it doesn't mean that that's done, because there's still, based on the weekly, because the daily is bullish. So if daily is bullish, we look for weekly targets, and pardon me, based on the weekly, our target is way up. So this week, yes, the weekly high might be here, or they could push it a little bit higher, but that's just for this week. So next week we are still bullish, so there's a chance that as the week starts, they could do something like this. So week starts, okay, the week will start, and then they're gonna drive price down Monday, Tuesday, and then hit this level, and then Wednesday, Thursday, Friday, we're gonna see this rejection, and then price will go up. So next week, that could be the candle that could form. Okay, and then we have a gap here with a down candle, and then we get an up candle for the rest of the week. Does that make sense? So every week, going forward, we'll be looking for, like from this week, every week we'll be looking for up candles to form. We don't expect down candle, we expect up candles. So if the week starts and we see a down candle on the weekly time frame, it could be manipulation. They're just going down to find liquidity and then reject and go higher. All right. Yeah, initially I did struggle with that. Like I did mention, I did struggle with that because once we hit a target, I was, as soon as we get a pullback, I start looking for the opposite direction. So I start looking for, like I'll use the euro as an example because it has happened to me quite a lot. And as soon as we hit this target, we break this high, I start going for longs. Okay, and then all of a sudden price will turn around and then go against me. And it did happen to me for a long time. And then I had that conversation, and he said not to expect the reversal. I should just go with the flow on the daily. And then if the daily changes direction, then and then you change direction. So the flow on the daily is still bullish. The daily is still bullish for now. So we could just keep having up candles to continue going higher. I want to keep this one clean because I love it. I love seeing these down candles. Maybe they could go up in here and then form a down candle as well, just like we've seen there, and then the next one. So they could go up here and then stay there and form a down candle there, and then shoot up for the next target. Never say never. We have old low in here. Yeah, old low, reaccumulation. So we could come in here and stay in there back and forth, and then break it. Yeah, it could come in here, stay in there, back and forth, leave a down candle in there, and then break it, because this is where we are anticipating a buy. Yeah, we are anticipating a buy in here. We are not expecting price to go there and then sell off. We were not expecting price to come here and sell off. We were expecting exactly this. Form a buy there, form a buy here. So we are expecting price to form a buy there for a continuation. Let's jump back to and see how beautiful this one has rejected. So this is smart money. If they were there, that's exactly what we want to see. Okay, thank you guys. Today is Thursday, tomorrow is Friday. I hope you had a great week. I had a fantastic week. Happy every day. So tomorrow we're going to do the morning session, and that will be it for the day. So bring your pens and papers, and let's have a wonderful Friday. TGI Friday. We might get some TGI trades tomorrow, because this week has been one-sided. There has been price going one way on most of the pairs. So we might get some TGI Friday trades. All right. Enjoy the rest of your day, and I will